Welcome. Today we're going to be talking about the U.S. election. Is the election over, Kevin? Is it done yet?
Well, I would have to say that theoretically it's over, but Donald Trump yet to concede, so this could go on for another couple of weeks yet. So
It's
we'll have to
close.
see how it plays out.
We're getting there.
Yeah, slowly but surely we're finding it out.
So we'll get into that. We'll talk about it from an investment perspective. But before we do, a reminder, we're always happy to help out. So if you have questions, let us know. You can visit the website right down there. If you're watching on YouTube, you can click like, share, anything, whether it's related to the election or a different financial question, simply let us know. We're happy to help out.
We're here 24/7.
24/7. Oh,
wow.
Don't call me at 3 in
Maybe
the
not
morning.
quite that much, but we will return to you within a reasonable time.
A good qualifier.
Yes.
So we'll get into the election details here. We'll jump back, looking at what happened in the lead up to the election. What do you think people are feeling as we approach that election, Kevin?
Well, it's a variety of things. Was the fear that the election itself would be contested, which of course it is at this point in time, and that has led over whether it's going to be solved, I said, in a week, whether it's solved in a month. People do not like to be uncertain of anything. It leads to fear. You couple that with the surge of the coronaviruses, and we saw that over the course of the last 2 weeks, you started to see a sell-off in October.
Yeah, this is the S&P 500. It's going from mid-October until the end of last week, so to the end of the week which contained the election. You can see the last 2 weeks of October pretty much down, lots of turbulence. And like you said, it was fear. People were pricing in worst-case scenarios. And you had both extremes in there. You talked about it earlier, the contested election. What if this comes down to one state and then suddenly there's an avalanche of lawsuits and it drags on for months and months? That was one worst case. The other, and this is really what the polls are kind of showing, is what if it's just a landslide and the Democrats take everything, the House, the Senate, they take the presidency, and then you get a really big change in fiscal policy. Maybe taxes go up, different stimulus. That seemed to be the other end of the extreme, and both of those were happening at the same time.
Yeah, so when we get that as a mixture, I mean, that big uncertainty leads to, people wanting to get out. The fear factor is bigger than the greed factor for most people to try and drive. But as we've seen, once the election results came out, you started to see an increase. All of a sudden, there's a little more certainty. Similar to what the election results looked like on election night compared to where they were 1 week later. On election night, if you took a look at the map was basically mostly red. It looked like Trump was getting back in. But again, we hadn't counted mail-in ballots. The pandemic meant that we were going to have this stretch out at least another couple days. And as we started to see as the week moved on, more and more states went from red or Republican to blue or Democrat. And we started to see that things were going into Biden's way. So as a result, with a little more certainty and a little more clarity, people felt comfortable to be back where they should be.
Yeah, I think for most investors, the election was really over election night. I know we didn't quite get the official result for some time to come, but election night, those extremes I talked about were kind of taken off the table. We knew it wouldn't come down to one state, and we knew the extreme of Democratic sweep. Both of those were kind of gone. So you ended up with somewhere in the middle, and that was enough clarity, enough of a relief, if you will, and you have that relief rally kick in. And that's what you see in the second part of the chart here. You see that incredible, almost ski slope. It just goes straight up.
Yeah, I mean, basically what we've got is a mirror image of the week before. All we heard about was the markets are down 5% going into the election, and a week after, the markets are up 5% coming out of the election. So theoretically, it's like nothing happened. Once people get a little more clarity as to what's going on, and once they see where the results are going to wind up, all of a sudden there's that ease that comes out. So that makes people a little bit more comfortable. And as we see, the hardest part is, do I sell, do I not sell for people going into an election? This is obviously a scenario that would probably say, if your goal hasn't changed, the course of 2 weeks shouldn't change anything for you either.
Absolutely. Yeah, I had lots of those conversations leading into the election, and I agree with you completely. If your long-term goal is the same, don't make a short-term change. And this is a great reason why. You had a massive drop followed by a really big rally, and trying to trade in and out of there would be very difficult for the average individual.
Well, that's exactly it. I mean, we're here to be more of a pension fund style manager as opposed to a day trader. If you want to be day traders, that's one thing, but usually the goal is not to be a day trader going forward. So as we've seen, markets can react to small little pieces of information very violently both ways. And as we're getting going forward, the markets seem to be stabilizing a little bit more now that we get a little more clarity.
Absolutely, absolutely. And if we add a fine point to that, this is from Bloomberg, and it looks at the S&P 500, the U.S. stock market, and it looks at the day after an election, a presidential election to be specific. And what happened last week on Wednesday was the largest one-day move following a presidential election. So a significant move, like you just talked about. Sometimes a little bit of piece of information, a little bit of clarity, and you get a large swing. In this case, a large positive swing the very next day.
Yeah, and as we see, I think as you've mentioned before, the point, I think it's because we had things that were somewhat similar. We were looking at a Congress that's going to be made up of a Republican Senate and probably a Democratic House. And whether the president on top is Democratic or Republican seems to be very little much a need that has to be utilized. We're finding that as long as you've got something that's bipartisan between the other two places, you're going to get a little bit more clarity going forward.
Absolutely. And with the election pretty much out of the way, I think for investors now, the election more or less settled, no longer a big impact on the market. It begs the question, what are folks looking at now? And I love the quote from our chief strategist here, Tony Dwyer. I'm going to share it. The most important person in Washington, Jerome Powell, the Federal Reserve Chair.
Yeah, because after all, at the end of the day, whether it's a Republican or a Democrat sitting on top, the guy that controls the money is the big one. And as long as he's willing to keep printing, we're going to find that people are a little more comfortable than they were, say, back in March or April when things looked a little bit more glim. So going forward, I think we're good.
Yeah, I made it abundantly clear. Rates are going to be low for a while. Here in Canada, we've done a similar claim. Rates are going to be low for a while. And in the U.S., they even publicly mentioned they'll do whatever it takes. They're going to be that backstop. So with the election out of the way, the scary event behind us, we had that relief rally. I think folks are going to be focusing more and more on that monetary stimulus and that Federal Reserve background, if you will, that backstop to the overall market.
Yeah, so when we get together at the end of the day, the U.S. election looked like it was going to be one of the biggest events that was going to go on for the year 2020. And at the end of the day, it seems like maybe this is just a minor blip out of everything that's going on forward.
It seems that way. I mean, obviously, and other issues could have a larger impact, but from the stock market, it looked like a couple weeks of a blip, a 2-week drop heading into the election, then a very strong rally the week after, and you're back to where you started.
Yeah, well, hopefully if we can get this COVID thing cleared up, maybe a nice Santa Claus rally comes around the corner and it makes 2020 not so forgettable.
Hopefully. And what do you think is on the horizon? Where do we go from here, Kevin?
Well, I think if we have to take a look at a few things here and there, we're probably going to see that the vaccine is going to become more and more of a play. We're going to see how the transition goes from Trump to Biden, assuming that nothing goes on in the lawsuits. And we probably will have a little bit more clarity going forward in 2021 as to what companies look like and how the economy might run.
Yeah, absolutely. Well, I'm a portfolio manager. Kevin's a portfolio manager. We're both with Becker or Wealth Management. And as a reminder, we are here to help. Visit the website. You can see the link there on the bottom. Send us your questions. Maybe you got something about the election, something we didn't mention you want us to talk about. Let us know. Or maybe a completely different topic. Happy to help out there as well. So until next time, we will see you guys again very soon.
Have a great day.